Hi everyone, hope you're doing well. This is Karthik sir here. We are now going to do today the revision of audit of banks. Okay, very important chapter if you ask me. A chapter which has a good carry forward in CA final also. So whatever you learn in CA inter, you will directly get the benefit in CA final also. Okay, so let's see this. Now in audit of banks, the first part that I want to take you all with is in relation to advances. So we'll go there first, and I'll take you in relation to that part first. So everyone, please see this area now. Just a second. Correct. Advances. Okay. Now in advances, there are several parts. You should know each of them properly. So let's do it one by one. Please see here. What are the various nature of securities? The security can be a primary security or it can be collateral security. Primary security is your main security, and the collateral security is the additional security that you give to the bank. What are the examples of the most common type of securities? I've told the students in the class. You need to know any 5 to 6 points out of these points. So any when you take a loan from the bank, what kind of security can you give? So you can give any 5 to 6 examples. It can be gold ornaments, it can be shares, it can be land, it can be building, it can be inventory, it can be any of these assets. Okay, it can be many other things also. Okay. Next, we had seen what is the mode of creation of security. Okay, what are the various modes? So in that we did a code called formulas. That is your pledge, hypothecation, mortgage, lien, assignment, and set off. Okay. Pledge is when you are taking a loan and you're giving a movable asset as security, and the possession of the asset is with the lender, that is the bank. In case of hypothecation, you are again giving a movable property as security, but in this case, the possession of the property is with the borrower. In case of mortgage, you are giving an immovable property as security. Mortgage can be registered mortgage or equitable mortgage. When you are giving an immovable property as security to the lender, at that time, if you are transferring it in the name of the lender and then giving it to them, it is, and then giving the documents to them, then it is called a registered mortgage, and without the change in name it is called as equitable mortgage. Okay, this is a revision video, so all the explanations of this I've done in the class, so I hope this revision video is helping you. L is in relation to lien is basically when you give the right to retain to the lender. So when you give the right to retain to the lender, it is called as lien powers, okay, or lien. After that, you have assignment. Assignment means the your debtor you're transferring it to someone else. So when you transfer your debtor to the bank, it is called as assignment. Set off means suppose if you have a fixed deposit with the bank, that is your credit balance is there with the bank. And if you have taken a loan from the bank, and if you are not able to pay the loan, and if the bank has the power to subtract your debit balance, that is your loan account, from your credit balance, that is your fixed deposit in the bank, then that is called set off. So basically, when the bank deducts your loan amount that you have not paid from the fixed deposit account that you have with the same bank, that is called set off. Okay, that is a mode of creation of security. The code is again formulas: pledge, hypothecation, mortgage, lien, assignment, and set off. Okay, let's go further. Then after that, we had done area which is, in my opinion, very important, and that is prudential norms. What are the various prudential norms? We'll cover the important ones. For the other ones, I've given you the notes also. Okay. So the important ones are in this manner. First is called non-performing asset. Okay, NPA. When is an asset called as an NPA? When the principal or the interest is overdue for more than 90 days, we call it as an NPA. Okay. Second situation where the bill has been discounted with the bank by the drawer, and the bank on the due date goes to the drawee to collect the money, and the drawee does not pay the money, and it is more than 90 days since the due date, then it is called as an NPA. Next, if the account is an out of order account, so account can be out of order in these three scenarios. Scenario number one is when the amount that is withdrawn is more than the sanction limit, where the amount that is withdrawn is less than the sanction limit, but there is no credit in the principal operating account, that is a current account. When the amount that is withdrawn is less than the sanction limit and there is credit in the principal operating account, but the credit is, sorry for that, just a second, but the credit is not enough, no, but the credit does not even cover the interest portion of the overdraft that you have taken, or the advance that you have taken from the bank. Okay. Now these are called out of order, and any out of order item becomes an NPA. Next is overdue. So overdue we will see in this manner. Let's see this overdue. That is this. Overdue, a separate table is there which says in this manner. I'll show you the table. See, whenever on the due date the borrower has to pay the money to the bank and the borrower fails to pay the money for 90 days period, then we call that borrower as an NPA. Okay. Whenever the borrower is declared as an NPA, then for the next 12 months from the date of declaration of NPA, we call that borrower as a substandard asset, and the bank will start to slowly create provisions. So provision is created at the rate of 15% of the loan amount, okay, or the due amount. After the 12 months of the substandard asset period is over, then after that the doubtful period starts. So we start with the D1 period. So 1 year after the 12 months gets over, we call it as a D1 period. And for that, if the asset is secured, then we take 25, we increase the provision to 25%. And if it is unsecured, we increase the provision to 100% of the asset of the loan value. Next is, even after this 1 year is over, the drawer is not paying. So now we are in the D2 category, doubtful category 2. In doubtful category 2, at that time, if the amount the borrower has not paid, and since the substandard asset period, it is now 1 to 3 years, that is nothing but year 2 and year 3. In that case, we call it as a D2 category. In that case, the provision in relation to the loan amount is increased to 40%, and in relation to unsecured loan we keep it at 100% only. So it was at 100% only, we keep it at the 100% mark only. And finally we have the D3 category. Suppose if the borrower doesn't pay the amount and it is more than 3 years, again from which date? From the substandard period date. When the substandard period gets over, from this date it is now more than 3 years, then it is called doubtful category, doubtful 3 category. In that case, we create 100% provision in relation to secured loans, and for unsecured loan, it stays at 100%. Okay. Suppose at any time, I have drawn this blue line here, which you can see going down. Suppose at any time, the RBI's inspection team or the statutory auditor or the internal auditor, if they say that the borrower is not going to pay you any money, then we treat such asset as a loss asset, and we immediately create a 100% provision on this asset. Okay. So now let's go to the base chart. Now this area which you're seeing on the screen is called as overdue, and overdue is a part of the original code, and that original code is note ag. Okay. So N we have done is NPA, then O is overdue. Now T is called tickling matters as per the code that I use. Tickling matter is nothing but term deposit, Indira Vikas Patra, Kisan Vikas Patra, life policies, and national saving certificates. For these are the best kind of securities for the bank, because even if the borrower is not able to pay the money, but the bank can 100% recover the amount in relation to these assets. Okay, I hope you remember the each and every example that we did in the class. These are called the tickling matters. Okay, so these are the best kind of security, and because of that, the bank will never treat it as an NPA. Provided only one condition is there, that sufficient margin is mentioned. The loan can be of 5 lakhs, and the secured amount, the security, should be of a value of more than 5 lakhs. Okay. Next is called erosion. Erosion in the value of assets is a very important thing for the bank to check. So when the bank is giving a loan and taking any asset as security, the bank should continuously keep checking whether the asset has eroded or not. If the asset has eroded, then the bank is at risk, because it means that the security value that the bank has taken is of a lesser amount. So the bank has to continuously check on regular basis whether, first condition is whether the value assessed by the bank regarding the security, if the security value has now dropped down by more than 50% of the value assessed. Suppose the value assessed is 1.2 crores and the security value has dropped down to, let's say, 40 lakhs. So 1.2 crores, 50% is how much? 60 lakhs. And if the value of the security has now dropped down to 40 lakhs, in that case, it is a big issue for the bank. The bank should immediately consider the security as a doubtful asset. Okay. Second situation is when the loan has been given to some party, and let's say that party has paid some amount on the loan. Let's say the loan given to the party was 1 crore and the party has already paid, let's say, 20 lakhs on the loan amount, and 80 lakhs is pending for the party to be paid. Now, security that the party had given, the security has degraded to such a value that the value has become less than 10% of the outstanding in the borrower account. So let's understand this. Suppose in the borrower account there was 80 lakhs is pending from the borrower, correct? So 80 lakhs, 10% is how much? 8 lakhs. And the value of the security has dropped down to less than 8 lakhs. In that case, we will treat the borrower as a non-performing asset, and in that to which category? That is the loss asset category. So the bank should not have any hope that this borrower will pay any amount on this loan, okay, because we are treating him as the loss asset. Okay, very very important. Erosion in the value of asset, do it properly. What is this? Agricultural advances. Agricultural advances basically means in every state you have something called as a state level bankers committee, and they will divide the crops that are grown in that state into two parts: the long duration crops and the short duration crops. The crops that take up to 1 year to grow are called short duration crops, and the crops that take more than 1 year to grow are called long duration crops. Now, long duration crops are the crops. If the farmer has taken a loan for long duration crop, and if the farmer doesn't pay the loan within that crop season, one crop season means since the time you have taken the loan till the crop is harvested, long duration crop, that is a crop that takes more than 1 year. In that case, if the farmer is not able to pay that loan to the bank, then as soon as that crop season is over, one crop season is over, you will treat that farmer as an NP, non-performing asset. Also, suppose the bank has given loan to a farmer, but for short duration crop, then you have to take two crop seasons in this case. So as soon as one crop season is over, you will take another crop season here. And when two crop seasons are over, after that also, if the farmer has not paid the loan, you will treat the loan given to the farmer as a NPA. Simple. That is in relation to agricultural advances. Other than these, there are four other points. Suppose if there is a natural calamity in relation to agricultural advances, how it should be managed. Suppose if the balance sheet date, as on that date, if you have to check year-end transaction, how you should manage. If the loan is given for the salaried employees of the bank, how should be managed. So some small points are there which you can go through. Okay. Now after this, we go to the next area in relation to advances. So after this part is over, I will take you to the next part. Just a second. Okay, please come to this part. Now here you have then a very important three answer set that is called in audit of advances. You have first, what evidences should the auditor check at the time of audit of advances? That is basically this question. So what evidences should the auditor check is one question. Second is what audit procedure should the auditor do? See, what audit procedure should the auditor do in order to obtain sufficient appropriate audit evidence? For that, the auditor will do some audit procedures. Okay. So what audit procedure should the auditor do in order to obtain evidence regarding advances? That is the second question. And the third question that should be there in your mind is evaluation of internal control over advances. Okay. We'll complete the evaluation of internal control over advances first. So let's do this. And for this, as you know, we have this table with us. So you have to check the creditworthiness of the borrower. You should check whether all the documents are there in place. You should check whether terms and purpose is properly explained to the borrower or not, and whether that is being complied or not. We should check whether the borrower has given us enough security. If the security is not sufficient, whether borrower has given us some additional security here. Additional security, if they are in the form of shares or any other security, we should see whether it is in the name of the bank and whether it is registered with the bank. Next is if inventory is given as security in relation to your overdraft facility, okay, or cash credit facility the bank is giving. And if inventory is given as security, then you should check the drawing power register, whether it is within the limit and it should not be in excess of the limit. Suppose if it is in excess of the limit, you will inform the controlling authority, that is the person who is handling the matter in the bank. He has to inform his senior, that is the controlling authority. Finally, large borrowers should be checked by the bank persons or more frequently, and other loans should be checked at least once in a financial year. These are the points that are there in relation to evaluation of internal controls. Okay. Now, what evidence should the auditor gather? That is basically your this answer. What evidence should the auditor gather? This area. For this, we had done a very nice story called the bald uncle story. I hope you remember. First is the BAL, that is balance sheet date. Then after that, you will have um, the barber says I'm doing a duty, so you'll have the amount due part. Then after that, he sits and reads the newspaper, that is the supported by loan documents. Then he sees that no hair is there, so we saw no unrequired advances. Then after that, he puts oil. So in the class we had fun and we learned in the way of appropriate and properly applied the oil. Then after that, you have the hair grows and the man is now disclosing, classifying, describing himself. And finally, the barber gives a cap in his hand because the cap acted like a provision in the past. Okay. Now after that, we had done the next part that is in relation to this answer, that is the man goes to his house. And in our table, it is this question: what audit procedure should be done in order to obtain evidences regarding advances? So now that is this question here. So that is the man goes to his house and first of all he tells his daughter that he is he's a valid father, correct? No. So you remember that validity. Then after that, he shows the Aadhaar card, that is loan documents. Then after that, doctor asks whether he has done any operation. Then after the wife does an action. Remember this, and this. So you have existence, enforcement, and valuation. Then after that, the husband then shouts no. So no is what? Norms. Then after that, the wife goes to the temple, and there she meets the barber. She tells the barber, "Thank you, Anna." With that, we have analytical procedures. Then after that, when the wife comes back home, the hair has grown very very large. So large advances have become problem accounts. And finally, when the man goes to the local doctor for some medication because the hair growth is now stopping only, in that case, the rickshawalas pass which comments? Adverse comments. Okay, so you know this very very well. Again, a story, and I'm not dictating the entire story, it will take time, but in the revision session it is enough where I just give you the glimpses of the story and you're able to just imagine the answer once again. Okay, now that completes your this area in relation to audit of advances. Okay, now we enter the next area called audit of revenue items. So let's do this. In audit of revenue items, we have the first and the most important answer, which is this area. These were the concepts explained in the class, so I'll come to the answer directly. So in this we saw, first of all, the revenue should be recorded on accrual basis, and in nowadays it is recorded on the core banking system. Okay. Now after that, for tickling matters, if the loan has been given to the bank and tickling matters have been taken as security, tickling, as you know, again, term deposits, Indira Vikas Patra, Kisan Vikas Patra, National Savings Certificate, and life policies. So these points, if the loan has been taken by a person and he has given to the bank, tickling matter as security, it is one of the best securities for the bank. And I am again telling that the income for the bank, that is in relation to the interest income for the bank can 100% record it, because there is no worry about this matter, because 100% this will be received provided there is adequate margin maintained. Simple. Then we saw all income should be recorded, no income should be unrecorded. Next is materiality. In materiality, we had seen that the RBI has advised the auditor that if the auditor is reckoning the income on gross basis, then if we should take 1% of total income as the materiality benchmark. If it is reckoned on net basis, then it should be 1% of the net profit before tax. Okay. If it is not material, then it should be recognized on receipt basis, and the auditor need not qualify this matter because it is not material only. Okay. So any mistake that is there is not material, it is a very small amount. Okay. Next is F, fees and commission. Fees and commission we first saw in relation to CLG matters. That is, if you remember in the class, we had done bills for collection, letter of credit, Neerav Modi example we had taken in the class, and finally the bank guarantee matter. Okay, so for this the bank will collect some fees. Next is the bank is renegotiating or rescheduling any outstanding debts. Then in that case also the bank will collect the fees from the borrower who is not able to pay the loan on time. Next is for bills for collection, the bank should collect the fees only after the drawee collects the bill. And finally, if the bills are purchased and discounted, the discounting charges should be apportioned between the 2 years if the year end is coming in the middle, and the discount charges earned and the discount charges spent should not be netted off. Should not be netted off. I hope you remember this. Finally, last point, very very simple. If your net profit of the current year is there, and sorry, if your non-performing asset of the current year is there, and if you have already declared as a non-performing asset, it means you are not expecting any income to come from that. So they have said here, if there is a significant uncertainty exists, then no income from NPA should be recorded. And for the previous year for which income has already been recorded, what you will do is, if income is recorded in the previous year, but in the next year the asset becomes an NPA, then you will have to reverse the entry, because now no money is coming in from that borrower. So we have to either reverse it or we have to create a provision that is called provide for it. In this way, the audit of revenue items is covered. Then we'll go to the other areas. These are the small areas which are covered, and we'll do it one by one. And please come to this part. Here we did something called as audit of revenue items. Very, very important. In this, we saw a code called ABC WinFit. If you remember, A is advances. Just a second, please. Please here, advances, bill purchased and discounted, commission fees, and other similar income. You can see here, advances, bill purchased and discounted, commission fees, and other similar income. For this, we have to, and others also. So basically, the income is wrongly credited in the past, and even for finance charge component of finance lease. For these areas which I have circled, that is A, B, C, W, and FI, you have to remember that if you have already taken the income in the past, but that income has not is not realized, or the income has not come, then you will have to reverse it or provide for it. So everywhere you will see the same thing. You will see here, see, reverse it or provide for it. Same thing you will see here, that is reverse it or provide for it. Again you will see here, reverse the income or make a provision. So same things are mentioned regarding this A, B, C, W and FI. In relation to interest income, for which large debits are seen in the interest income account. For that, the auditor should make an inquiry whether that debit in the interest income account is genuine or not, and the auditor should see whether the bank has passed the reversal entries properly and it is not fake entries. Okay, and I had, if you look at your notes from this area to this area, I had given you a star or important because this is an important part. Okay, so you understand, if large interest debits have been taken in the interest income account, we have to inquire with the bank whether what is the reason that they took such large debits, and we should do a proper inquiry and see whether proper justifiable answers are given from the bank persons. Okay, last point is in relation to takeout finance. I told you regarding takeout finance, very simple matter. If takeout finance is there, in that case it means that a person who has cheated us in the past or who has become an NPA in the past, regarding his further loans we are now worrying about. So if we are worrying about the further loans, we should not treat him as an income till the time the actual money is received. So if for a person who has become an NPA, if later on he gives some money, we should treat it as an income only if the income is realized, only if the cash is received, and not on accrual basis. Okay, very very important for takeout finance. Okay, takeout finance you will find it here. Simple. So that is your ABC WinFit. Now after that we went into the next area called partial recoveries. I hope you remember we had excellent discussion in the class. I told you if the partial recovery is done, then whether the we should take the entire income as principal, or we should take entire income as interest, or partly as principal and partly as interest based on the proportion there in the past. So how we should take it? So I told you in the class we had did a discussion and we had arguments placed properly, and in that we saw that there should be a uniform and consistent policy regarding this matter. Also, if income is partly or fully realized in NPAs, it can be taken to income. But in this also, we have to see that the credit towards interest in the relevant accounts are not out of fresh or additional credit facility sanctioned to the borrowers concerned. So basically, we should take the credit of the income of the past first and come to the most recent times. Okay, that is basically in relation to partial recoveries. Let's go to the next point, that is a memorandum account. Now in memorandum account, I told you that is a rough work account that the bank maintains. So if the person is not able to pay the loan, then we create a memorandum account and just keep a tab of if this person would have paid, then how much he would have paid. That money is not coming in reality, but if he would have paid, how much he would have paid. We maintain an account regarding that, so that it helps us in the negotiations of renegotiating the loan or any rescheduling of loan. It helps us in that matter. Next is in relation to income from investment. So if income from investment is there, for that we have a simple table here. I hope you remember this. In that we see the interest or dividend on investment we take first. From that we deduct the dividend from your joint ventures and subsidiaries abroad or in India. Any broken period interest we subtract, and finally premium on SLR investments we subtract. These are the things we subtract and we get this as the answer. Again, for individual points we have seen the examples. You have the diagram with you. You can just refer it very very quickly. Okay, so this is what we do in this case. Now, in this also two other points are there. Profit on sale of investments, if it is there, if it is profit, we'll credit to the profit and loss account. If there is a loss on sale of investment, we'll debit to the P&L account. Similarly, if we are revaluing the investments, in that case, if there is a increase in the value because of revaluation, we'll credit it to the profit and loss account. If there is a decrease at the time of revaluation, we'll debit it in the profit and loss account. Let's go further. Let's see this. Now we enter the expenses area. So now we did advances. We have now done a revenue item. Now we are doing the expenses part. And I'll divide the audit of banks into two parts. We'll do revision part 1 and revision part 2. So we are now doing the expenses part, which is the last part of your revision part 1. So let's see this. Now in this case, we first saw an answer. I'll just show you the diagram which we did, which was basically this audit of expenses. Very simple. We should see whether the expenses are reasonable. So that is the interest expense that the bank pays, whether they are in reasonable limits. Auditor should do an analysis of interest with the weighted average interest rate. So auditor should take weights regarding various types of interest which is there, interest on FD, interest on saving deposit, interest on recurring deposit, all these interest, and do a weighted average interest rate and then see whether it is matching with the value shown in the profit and loss account. Next is we should compare with the previous year's interest cost. We should also do a month on month interest analysis, which is part of your analytical procedures. And finally, we should do the checking on which basis, on sampling basis, because it is impossible to check the interest in especially big banks. You cannot check each and every interest payment. Imagine a bank like SBI. Can you check every month each and every customer's interest that is paid? Very difficult to check. That is what we are seeing here. Okay, so we'll do the checking on sampling basis only. Auditor will test check whether RBI directives are followed or not, rate of interest is properly considered or not, whether interest on all deposits is calculated properly, interest on FD, interest on saving deposit is calculated properly, and whether it is disclosed in the right manner. And finally, whether internal regulations of the bank, that is their policy procedures, are followed or not. And finally, if there are inter-branch balances, ICICI Bank, one branch has given loan to another branch of ICICI Bank, then they have to follow the rates given by the head office. So head office, whatever rates they have given for inter-branch balances, that is the rate we have to consider. So the auditor will check whether these have been done properly or not. Okay. So this is audit in relation to expenses of banks. Let's go further. We did this area very simple. That is audit of expense items. Very simple. So in this you will see we have a code called Dadi operates car. Okay, very simple area. So we'll check the. So now what are the operating expenses? Basically month-to-month expenses like rent paid or electricity paid, or we'll say Wi-Fi charges for of internet paid. So all these things are called as your operating expenses. Those expenses which you incur on monthly basis. So here we'll see in a flow. First is, so we should refer all the documents in relation to electricity bill, in relation to salary slip of the employees. All these things we can check. We can check whether analytical procedures are taken properly or not, whether there are any divergent trends. If we see year on year trends, if you are looking at, we should check the internal control, whether they are there in place or not in relation to expenses. Now this completes your Dadi. Operates is nothing but operates. I have used the word here so that you remember operating expenses, just to connect the question with the code. Then after that you have calculation. Auditor should check the calculation regarding various expenses. Auditor should check whether corresponding figures of previous years are shown properly. Auditor should check the reasonableness of the expenditure, whether it is not too high. And finally, auditor should check the ratio of to the total operating expenses, whether the ratio has increased or not. Example, in last year we paid 2 crores out of 100 crores. Total operating expenses were 100 crores and 2 crores were spent for electricity expenses. So it was 2%. Okay, so the ratio is 2 by 100. In this year it has become 7 by 100, so we'll question why it has increased so much, why how it has become 7 by 100 in this year. So this year also, let's say our operating expenses is 100 crores, but our electricity cost is, let's say, 7 crores. So how it increased from 2 crores to 7 crores, that is what the auditor is checking, the ratio to the total operating expenses. Simple to understand this area. Last area I'm covering in this only, that is in relation to provisions. Auditor should check whether provisions in relation to RBI compliances have been followed or not, RBI compliances, whether provisions for standard asset and NPA are taken properly. For standard asset, whether everything is taken on a sample basis, and for NPA, whether we have done proper classification for substandard, doubtful, and loss assets. We should also see whether the provision are adequate or not. Whenever we do the checking, we'll have to do the recomputation and see whether the amounts are properly shown. The auditor, if required, can ask for a detailed breakup of all the amounts. And finally, one of the most important provisions, remember, banks are also profit-making entities only. So we'll check whether tax provision is taken properly or not. Okay. So all these are the things that the bank will do in relation to expenses. Okay. So three big areas we just covered in a quick manner in revision. We did advances, we did revenue items, and we did expenses. Okay.